It's another interesting edition of the Market Review where we discuss key developments in the financial and capital market as it affects the economy. Happy new month of October to all, and of course, in the spirit of independence of Nigeria, our focus today will be on opportunities for deepening Nigeria's market to GDP size. Before we begin the conversation, let us give you a wrap of major market stories from last week. The Nigeria Exchange Group held its 61st annual general meeting at the Exchange House, Marina, Lagos, which was its first since it became a quoted company. At the event, the chairman of the board of the NGX Group, Tumba Bimbola Gumbanjo, who was due for re-election for a period of 1 year until the next AGM in 2023, voluntarily retired from the board and did not present himself for re-election. This was to allow for wider consultations. And also in terms of engagement with shareholders, the special business to raise funds of up to 35 billion naira for business expansion was not presented. This is due to the need for further consultations. Otumba Gumbanjo thanked the shareholders for working assiduously with the board and management of the group in delivering the dividends of demutualization and enhancing shareholder value, and for attaining many firsts during his term in office. In that AGM, shareholders raised the need for more governance, transparency, and accountability from the NGX board. Also, the FMDQ Exchange announced that it admitted the Julius Berger Nigeria Limited 30 billion naira commercial paper program under its platform. And that's a wrap of what happened last week in the capital market. In his recent presentation on the topic, the impact of the capital market on Nigeria's economic growth at the legislative retreat and engagement on the Securities Bill, Investment and Securities Bill 2021, organized by the Nigeria Economic Summit Group, serving as the Secretariat of the National Assembly Business Environment Roundtable, Mr. Lufemi Awoyemi, the chairman of ProShare, highlighted key issues that will form the thrust of our conversation today as we look at opportunities for deepening Nigeria's market GDP size. The first part is the reality that as a nation, we have a low market to GDP size, and this is really serious compared to other countries. Market to GDP size, which stood at 29.7% in December 2007, declined to about 20.3% as of 2021, according to ProShare research. From the analysis with a GDP size of $400 billion, the Nigeria Exchange Limited and the equities market account for $74.14 billion, that's 19% contribution, followed by the FMDQ Securities Exchange and the fixed income and bonds markets, which contributes $45.64 billion and 17%, and the NASD PLC and unlisted OTC securities market, which of course had $1.19 billion, translated to 0.3% of the GDP size. And that shows that it's still low compared to other countries, US, UK, and others. This revealed that there's a lot of work to be done in deepening the capital market and improving activities in the stock market. This has been the major conversation across the ecosystem. But there are 4 issues that are cardinal here, and we'd like to speak briefly on them. The first is the Capital Market Master Plan. The Securities and Exchange Commission has engaged stakeholders on the Capital Market Master Plan, reviewing it in a way that aligns with the realities of the 21st century. One major point is that it requires urgent action to support domestic capital formation. That's very critical, because at this point, the market needs to be the go-to when it comes to capital formation. So it's very important that the Capital Market Master Plan is reflective of that. Stakeholders are really watching to see how this reviewed plan will bring efficiency to the market. The second, and for those of you that watched my last edition interview with the chairman of the House Committee on Capital Markets, Honorable Babangida Ibrahim, the review of the Investment and Securities Act is still ongoing, as the Senate and House Committee on Capital Markets are looking at the process of reviewing the ISA. One important issue that's very, very needful and of course very critical is the enabling of the Securities and Exchange Commission to be a driver of market development with less emphasis on revenue generation. I can tell you, in covering the market and interaction with stakeholders, this has been the burning issue. How can SEC be more viable, more strengthened to perform its governance role, as we see in the US and even South Korea? SEC's funding structure, according to Mr. Wemi, must be revisited, with the federal government of Nigeria taking the position of SEC as market regulation and development catalyst, and not as a revenue head for the Ministry of Finance. This is very important because if Securities and Exchange Commission continues to be more of a revenue driver for the Ministry of Finance, there are a lot of issues that will be going on in the market. It's supposed to be more of market development, develop the ecosystem so that it thrives. The third, and this is important as we are building up now to 2023 general elections, is the need for pro-market policies. The next level for the Nigerian economy is having the implementation of policies that will encourage more companies to come into the stock market, to list either through an IPO, that's an IPO or introduction. It's initial public offering, IPO. Now the examples must be set to government-owned enterprises. Let's take Saudi Arabia, for example. It has the state oil company Aramco, and less than 5% of it was listed on the New York Stock Exchange. Its valuation is currently over $2 trillion, competing with the likes of Apple. Now, this is a challenge for Nigeria, and let's look at state-owned enterprises like the Nigeria National Petroleum Corporation, or even the 49% controlled Nigeria Liquefied Natural Gas on the government part. If these two could be listed on the market, it would really have a ripple effect on the entire market ecosystem and the general economy. Sectors like power sector, agriculture, solid minerals, and information and communications technology need more representation in the capital market. That's why we're seeing that need for big companies, for state-owned enterprises to come on board. The Director General of the Bureau of Public Enterprises last year said that it generated over 1 trillion naira from the sale of state-owned enterprises. But why is it that none has been listed on the market so far? That's a big question. And these are big conversations that we need to have in the capital market. And then we get on to number 4, which is the adoption of emerging technologies. To achieve a fit-to-size globally competitive capital market, the adoption of emerging technologies is crucial to the sustainability of the capital market. This is why it is imperative to leverage big data, artificial intelligence, blockchain, robotics, amongst others to deepen the market. This is critical to attract the millennials to participate in the capital market because we are in the 4th industrial revolution. With these 4 issues presented, they would go far in unlocking opportunities in the capital market and making it more positioned to support growth in the economy. Because a less than 50% market-to-GDP size is not good for Nigeria. And I believe that every stakeholder is taking note of this, particularly the regulator, and most importantly, the review of the ISA. It must reflect a more inclusive market. In addition, the commodities ecosystem, the commodities market ecosystem is coming on board, and I'm happy that the House Committee and Senate Committee are looking at how to improve the ISA to reflect the contributions of the commodities market. We hope that these are issues that will be tabled and discussed and implemented, and most importantly, the role of SEC, because we want a regulator that is respected in the markets. We want a regulator that is driving development in the market. We want a regulator that is encouraging inclusivity in the markets. And if that happens, I'm telling you, we will be talking about an over 75% market to GDP size in less than 2 years. It's doable if all stakeholders come on board and make this happen. That'll be all for this edition of the Market Review Show. If you have questions or suggestions on our conversation today, please send them to the email displayed on your screen. Also, join our website, www.proshare.co, to get our latest news stories and articles and stories, particularly what we've discussed around the impact of the capital market on Nigeria's economic growth, written by the chairman of ProShare, Mr. Lufemi Awemene. Very incisive article you need to read to get a broad perspective on how capital markets should be structured. Don't forget that you need to be informed to make the right decision, investment decisions. And to all our viewers, ProShare is carrying out its 8th edition of its online trading ranking report. A survey is already ongoing, and you need to be all stakeholders and operators to participate in this. So join our website, like we've said, www.proshare.co, to participate. And it's going to be a big one when we wrap up this survey and release the reports. Part of how technology is driving our markets. Thank you for watching, and keep discussing the financial and capital markets because they create wealth and economic opportunities.